Good morning. I'm Brian Curtis. Here are the stories we're following today. Israel is pushing deeper into Gaza, and around Gaza City, the prime minister is promising indefinite security forces. Ed Baxter with that story and the rest of the news from the 960 newsroom. Ed?
Yeah, thanks, Brad. This is the 1 month mark since Hamas raids into Israel, and Bloomberg's Nick Wadhams reports forces are hitting now what they say is the heart of Hamas.
What we're hearing is that Israeli troops are actually fighting inside Gaza City, moving in from the north and the south. So it looks like they've essentially encircled Gaza City, which is where they believe a lot of Hamas's military leadership is.
And Prime Minister Benjamin Netanyahu, in talking with ABC's David Muir, says the question of how long Israel will remain in Gaza is a major topic.
President Biden has said that it would be a mistake for Israel to occupy Gaza. Who should govern Gaza when this is over?
I think Israel will, for an indefinite period, will have the overall security responsibility, because we've seen what happens when we don't have it.
And Netanyahu also saying so far not agreeing to any kind of pause, as he's been pushed to by the U.S. to do for humanitarian reasons. And aid for Israel, well, it's hanging still up in the U.S. Congress. House Speaker Mike Johnson saying it is tied to the IRS.
We passed a bipartisan Israel support measure, which is exactly at the level that was requested by the White House and Israel. $14.5 billion. We included a pay for. And unfortunately, some of our Senate Democrat friends have taken issue with that.
And there's a problem with Ukraine aid as well. Republicans want it tied to the border.
We're very serious about this, and I think it will be difficult to get the package across the floor in the Senate without a credible border solution.
And that, of course, is Senate Minority Leader Mitch McConnell. Meanwhile, Johnson says that House Republicans are preparing a temporary spending bill to avert a government shutdown in a week and a half.
We're working earnestly on that. We certainly want to avoid a government shutdown. It's a dangerous time around the world right now. We recognize that, and we're doing our job.
Off-year elections in some U.S. states today with the issue of abortion front and center. Since the Supreme Court threw the issue back to the states, Ohio's election today is an extremely important bellwether to whether it's an issue with traction. Bloomberg's Kaylee Lyons.
We have seen post the fall of Roe versus Wade that abortion is a real turnout driver, especially in special elections in which abortion rights advocates have notched a lot of victories. And once again, if this is indeed cementing abortion rights into the constitution of what is more and more a red state, it could be a pretty big signal about what's going to drive turnout in the wider election in 2024.
And Virginia.
This is a real big test for the Republican governor, Glenn Youngkin. He is trying to cement control of the entire state legislature by flipping the Senate from the Democrats and retaining control of the House. Whether or not that effort is successful, it could be a pretty big bellwether for 2024.
And for a potential candidacy for Youngkin for 2024 as well. Global news 24 hours a day and whenever you want it with Bloomberg News Now in San Francisco. I'm Ed Baxter, and this is Bloomberg. Brian.
Ed, thanks very much. I'm Brian Curtis along with Paul Allen. We look now at some of the top business stories of the hour. Fed policymakers are emphasizing the need to get consumer prices down to the central bank's 2% target. In the latest Fed speak, Minneapolis Fed President Neil Kashkari said that the fight against inflation is not over.
We're going to let the data guide us. We've moved very aggressively. We've made a lot of progress on inflation. We're not done yet, meaning inflation is not back to our target. And if we need to do more, we will.
Kashkari said that there is no discussion at this point at the FOMC about cutting interest rates. Separately, Chicago Fed President Austin Goolsbee told CNBC that reducing inflation is the number one priority. Fed Governor Michelle Bowman said it was too soon for officials to know what the full effects of the recent rise in yields will be. And that's something that we'll be discussing with our guest in just a moment. Bowman also said that she is expecting more interest rate hikes.
U.S. officials will seek to limit some access to federal home loan banks. This comes after multiple failing lenders turned to the $1.3 trillion system in desperate bids to survive March's banking crisis. The story from Bloomberg's Charlie Pallett.
After a review of the system that lasted more than a year, the Federal Housing Finance Agency will move FHLBs away from serving as lenders of last resort for financial firms in turmoil and back to their roots in housing finance. According to a report, the plans ratchet up federal oversight and seek to push banks toward the Federal Reserve's discount window in times of extreme stress. In New York, Charlie Pellet, Bloomberg Radio.
Well, in a rare move, we're hearing that Apple is delaying software overhauls to fix some glitches. The story from Bloomberg's Tom Busby.
The tech giant pausing development of next year's iOS system software updates for the iPhone, iPad, and other devices after a proliferation of bugs in earlier versions, and to give itself enough time to work out those glitches. Now, rather than adding new features, engineers at Apple, known for its clean interfaces, easy-to-use controls, and commitment to privacy, have now been tasked with fixing those flaws and improving the performance of the software. Tom Busby, Bloomberg Radio.
Tom, thank you. Let's take a quick look at Apple's share price. It didn't seem to really affect investors, this story about the delay, because Apple traded up 1.5% in today's session.
Well, Chinese President Xi Jinping will meet with top U.S. business executives next week. Bloomberg's Ann Cates reports.
Xi is set to attend a dinner with corporate leaders when he visits San Francisco for the Asia-Pacific Economic Cooperation Summit as the U.S. and China continue to work on stabilizing relations this year. High on Xi's list of priorities for his U.S. trip is calming foreign investors who are increasingly nervous about doing business in China due to issues including geopolitical tensions, a slowing economy, and detention of employees. Chief executive officers of major U.S. companies are on the guest list for the dinner. In Washington, Ann Cates, Bloomberg Radio.
We're told President Biden has been briefed on what his advisors see as a Chinese plan to build a military facility in the Gulf nation of Oman. And we hear that Omani officials are amenable to the idea. Bloomberg's Nick Wadhams has more.
As far as we understand from what folks were telling us, China and Oman have had early conversations, and those conversations are continuing. I mean, and there's a great deal we don't know. You know, the extent of this base, what sort of assets would be stationed there, and then, you know, even where it would be. So there are a lot of unknowns here. But what we do know is that there is this broader push by China to expand its influence in the Middle East and beyond.
Bloomberg's Nick Wadhams. Oman is of strategic interest given its proximity to the Strait of Hormuz. It's one of the most vital shipping lanes for oil and liquefied natural gas in the Middle East.
The International Monetary Fund has upgraded its projections for China's growth this year. We've got the story from Bloomberg's David Ingles in Hong Kong.
The upgrade comes after China recorded stronger than expected growth in the third quarter. That followed Beijing's release of numerous policies to support the recovery. The IMF now expects China's GDP to expand 5.4% in 2023 and 4.6% in 2024. That's up 0.4 percentage points from its earlier projections. Now, the IMF says Beijing's recent plan to issue more sovereign debts was a factor for the upgrade. The fund says slower growth next year can be attributed to China's property slump and weaker external demand. UBS and JP Morgan Chase have also upgraded China's growth. In Hong Kong, I'm David Ingles, Bloomberg Radio.
Joining us now on the program is Edward Harrison, Bloomberg team leader for the Americas and FX and rates, to discuss the market news of the day. So we had the Fed speak, Edward. It's a given that inflation is still too high, so nothing new to hear Fed officials saying it. Where there's indecision now, it seems, is whether higher yields are helping the Fed objectives. And policymakers seem to be fudging a little bit here by saying they need more time to assess. Your thoughts on that?
Yeah, I think that if you listen to the different threads, go from Bostic to Bowman in terms of from the most dovish to the most hawkish, what you're hearing them all say is that we are not going to lower interest rates anytime soon. They're all saying that it's not clear where the economy is going to head, so that at a minimum, we're going to hold for a longer period of time. And then the question is how long is that time going to be and what we're going to do after that? Bostic pretty much says, do not hike again. And Bowman says, yes, we will hike again. But really, what the market's not taking into account is that every single Fed official is saying, yes, we are going to hold for a considerable period.
Why is it that the market seems so convinced, or some sections of it, that we're going to see easing? Because we've seen this before a few months ago, haven't we?
Well, it's a sea change there, Paul, because I feel like basically, we have a post out in our group about this is the 7th time during this particular rally that the markets have said, okay, that's it. We're going to the Fed's going to start cutting interest rates. In fact, the market has priced in 100 basis points of cuts in 2024. The Fed, in their last summary of economic projections, they said they would do it 50 basis points at the most. So, it's just they're looking for the Fed to bail out the market, and it just hasn't happened yet.
Well, I when I look at the stock market, like the S&P 500, it's still down over the past 2 years. So I feel a little bit uncomfortable when people keep talking about how much the equity market has rallied. And it's true that the Super 7 or the Special 7, whatever you want to call it, have rallied a lot this year. But overall, the market is not particularly effusively to the upside, right? And the fact that it's chopping around within a sort of 5 to 10% range, that doesn't seem to me to be a big deal, Edward. Does it to you?
No, it doesn't. Brian, I'd go with the Magnificent Seven, which is a Clash song as well, by the way.
I always avoid that because it's so commonly used. I was thinking this morning, should I call it the Stupendous Seven or what?
Well, without those 7, we would actually be, the S&P 500 would not be in the green in the way that it is. It's really because of those 7 stocks. And if you look at the Russell 2000 as an example, it shows you there's much more pain. There's much more skepticism outside of that. So if you take it over the course of those 2 years, as you're doing, then you can see that, yes, we've had a considerable amount of pain. And over a very long period of time, which 2 years is in market thinking, that's why they want the relief. The relief comes from lower discount rates that come from lower yields on longer-term treasuries. And that's what the market is looking for.
I'm going to adopt what you just said. I'm going to call them those 7. So if we look at those 7, they're quite pricey. But what's driving this when the rest of the market's so flat? Is it TINA? There is no alternative. Is it AI? Is it something else?
Well, that's a good question, because really I think it has to do with the fact that perhaps growth is scarce. We are in the midst of an earnings recession. We potentially, because we're in the earnings season now, we're getting out of that earnings recession. But if you remember, there were 8 companies in that group. I had an acronym about a year ago, 2 years ago, Phantom Man, to compose all of those 8, and that includes Netflix. And Netflix was basically kicked out of this Magnificent 7 group, and now we're down to 7. And the reason that we're down to 7 is those are the companies that have been tried and true, as the other companies have bobbed about and done less well. Yeah. So it's a very narrow approach in terms of the stock market.
I started out by asking you about Fed positioning on whether or not higher yields are helping them achieve their objective. And we know that they have fudged a little, as I put it. And the tricky part is, are they looking at the 10-year yield at 5% or 4.5%? Because that's the kind of swing we've seen in just the last week.
Well, that is interesting, because one of the Fed officials, Waller, he was talking about that, how we've had a magnificent upswing in yields, but really we've gone down some almost 50 basis points since that time. So we're about halfway between the neutral and the tightness that we had at its peak when it was at 5%. So there's a certain reflexivity there. That is, if the Fed officials say that, okay, we're maybe about done, we still need to worry about inflation, but the market takes that as dovish, then we immediately have a loosening of financial conditions, and that in and of itself causes the Fed to have to hike potentially in the future.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts. You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 1061 in Boston, and Bloomberg 960 in San Francisco. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis. Join us again tomorrow for all the news you need to start your day, right here on Bloomberg Daybreak Asia.